Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, August the 3rd. The year's 2021. Let's talk trading. How to analyze a chart, part 6. This video is for educational purpose only, and your results may differ from mine. Now, we've been talking about analyzing a chart here since last week, and I had mentioned Fibonacci. So today we will, or I will go over Fibonacci. Okay, what is Fibonacci? Okay, that's possibly a good place to start, right? And you know something? On this particular chart here, I think I'm going to have to change the properties. Let's get a different background because the dots aren't showing up very well. What can we use? Let's use indigo. I think maybe the dots will show up better there. Yeah. I hope that works well out there in YouTube land. Fibonacci is basically based on the Fibonacci number series, which if you add the last two numbers in a series, so 1 plus 1 is 2, then 1 plus 2 is 3, 2 plus 3 is 5, 3 plus 5 is 8, 5 plus 8 is 13, and so on. Okay, and so then what we're using on the Fibonacci series in trading, I use the TR dynamic fibs indicator. They use these numbers and they're rounded. So you got 24, 38.2, 5, 61.8, and 76. And what the Fibonacci traders say is that price is going to do what's called a Fibonacci retrace. So I've got this set for weekly, and we're looking at it on a daily basis. So what happens is that the previous week it hit a high here, and the previous week's low was here. So you can see that from these 5 candles, because this is Monday, this is Tuesday, today's Tuesday. So you can see what happened. Price put in a high, and it usually will do at least a 23% retrace, or 38, and then sometimes a 50. And so that's on the retrace side, and that's what we'll focus on. And as you can see, it did do its 38% retrace. So how do you make money with this? Well, if you see it making a high, failing to make the high, reversing off the high, you use these for targets. That's the first step. So you trade towards the dot away from the extreme, which you have the high here and the low here for the week. Now, the other way is that you target an area. Well, it's going to say do a possible 58% retrace, and if it does, then you look to go long. So in this particular case, it didn't quite make it to the 50, so it started to retrace, and you figure, well, usually it's going to at least hit this dot, maybe this dot. And so basically you're trading dot to dot, or dot to dot, dot to dot, dot to dot. And that's it. Does it work? Yeah. Does it work every time? No. But the thing is, you as the trader have to make this and any other method or tool work. You could have 2 traders. One trader could literally make millions trading with nothing more than this, and the other trader will struggle trade to trade and just to break even. And so why is that? Well, it's probably because either 1, they don't have their risk management in place, or 2, their brain management isn't in place. And so Fibonacci is a waiting game, as most trading. So you have to wait for something to happen, and then as when that something happens, then you enter the trade, and then either you get stopped out or you manage the money and you make pips. So, this is an overall weekly. This is back when I was more looking for swing trading, but you can do the same. So, for example, let's take and change the settings. And this is an old indicator. Looks like I'll have to go in and add the code. We have the drop down. So I know there's 1440 minutes in a day. So we'll change that to the daily, and we'll drop down to the hourly. So this is yesterday's highs and lows. So if we look at the daily, you can see yesterday's highs and lows, drop down to the hourly. So what happened? Price actually started out below yesterday's low, came up through it, actually hit yesterday's high, and then now is coming back down. So if you were a fib trader and you saw this happen, you go, well, it's probably going to at least get to here. And so you can see how price waffled around but didn't break through and hold this 23% level. And then it went up to the 38% level, did a retrace, tried it again, then shot all the way up to the 77% level, and then didn't hold it, and then shot across the yesterday's high, and then came back down, and it's come all the way back down to the 23% retrace. So once again, using these dots for targets and entries. So in this particular hour, you see it opened within that 23% range, and now it's moved back across the 38 and actually hit the 50 before it's pulled back down. So that's just one way of trading. And you can put your simple rules behind it. For example, don't trade against the H1 candle color. Very simple. Knowing that if price isn't making a new high, it's reversing off the high. So in this particular case, you're going to just try and grab a dot. So maybe between these dots, we've got about 9 pips. Between here and here, between here and here, there's 6. And between here, there's about 6. So you can think of these as small scalp trades if you want. But there's, plenty of pips. You can make a couple of these trades, in a session and maybe put 10 or more pips in your pocket. And it's just one of those things where you can use it to also have a trade bias where you can look and see where price is within that Fibonacci range. Now there's something else called the Fibonacci extensions where it goes beyond the highs and the lows. And there's a fib tool you can use, but like I said, today focused on the retraces. And for me, I usually look to see maybe it'll get that Fibonacci retrace. And also, I wrote an indicator, I think it's called TRO, trade your way out. Because once again, I was a swing trader, and sometimes, price would go against. And so even though they advise you not to do it, and I will advise you not to do it, but sometimes you'll add into a trade because you're banking on this 23% retrace off a high. So you see something breaking out, it's probably going to retrace eventually, just like, say, those pivot points. You know it's going to usually take out those pivots. So then you add into the trade, and that indicator would tell you how many lots you need to add in to get to this point, or this point, or this point, whichever one you want it to target. So let me know if you have any questions about these fib retraces. We can even drop down to the minute chart here and still look at the daily. And, if you scrunch it up, it almost, looks like the sweet spot goal lines, except instead of being 10 pips apart, these are set at fib percents apart. So right here, we've got on the day, we got a 58 pip range, which we know price usually ranges more than 58 pips on the pound. Let's see, what did it range yesterday? I'll switch over to D1. Wow, yesterday it only ranged 58 pips. Today we've got 67. Oh, in fact, this range here, 58.2, this is yesterday's fib range because we've got it set for the previous day. Let me show you how to change that on the indicator. And I've got, just so you know, I've got the gauge turned on. You don't have to have the gauge turned on. There was I shift, set that to 0, and this would give you the current fib numbers for today. So this gives you the current for today, the high and the low. And then what you'll want to do in this particular case is, if you're trading and you're looking for price to make that new higher low today, let's shift over to M5 and get the whole. If you're looking for it to make a new higher low, so you know where the breakouts are, you know where price is right now. It's at the 37% level. You can see right here, right below the 38. So if you were trading this, and this is dynamic, so let's say it goes and it makes a new low, then when you see it making signs going the other way, you would be targeting this level right here. But this level will of course move down if price moves down, just like these. All the levels will slightly adjust to the new range. Once again, dynamic. Some people say, oh, it's repainting. No, it's dynamic. So that's the other way how to use this. And of course, you can always use this in conjunction, say, with the rat zone or the wick zone if you want, and combine them. So for example, the rat zone will be 20 pips off of this. So we got 38.71 down here. So 38.91 would be where the rat zone is. And you can see how it fits in with this 23% fib level here. And so you can see how price likes to move out of these extreme levels. So price gets here, you can treat it like a green rat zone. Price gets here, you can treat it like a red rat zone, knowing price is probably not going to stay in that area. So fellow traders, that's it for how to analyze a chart for today using the fibs. I hope that helps. And if you don't use fibs, I'm not saying you have to, because you don't. And I don't use them that much anymore. Every now and then I might take a sneak peek. And usually I like to look at the weekly to see how price is moving, to get an idea where it might wind up and possibly give a slight bias. So as you sit down at your trading platform, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.